live from the Jump Television Studios in sunny San Diego, California. Big Biz Show on the air. Great to have you along. We're brought to you by Prudential. Let Prudential be your rock for retirement. Also brought to you by Bayer Advanced. Better science, better results. Starbucks Coffee is a sponsor of ours, as is Bloomin' Brands and a number of restaurants you probably visit, including Outback Steakhouse, Fleming's Steakhouse, Roy's Restaurant. Yep. Bloomin' Brands. By the way, publicly traded company. BLMN. I don't own them, but maybe I should. Because I eat at those places a lot. Tax Resolution Services is now called Tax Defense Partners. Tax debt negotiation and resolution, and their sister company, Tax Audit Defense, eliminating worry over an IRS audit of your business or personal taxes. Thank you, friends. Appreciate that. As they sponsor our program every day. And look who walked in the door for me, Brent Wilsey. The brain trust here between these two guys, Chase Wilsey, Brent Wilsey, Wilsey Asset Management. Brent, how are you? Good to see you, man.
Good. Got a comment. You got some good restaurants there, Roy.
I know.
Yeah, you got some good.
I should flip you some stuff. They send us cards every once in a while. Actually, you don't need it. We should give the kids some stuff, right?
I used to got a pay raise.
Oh, did you?
No, I didn't.
How do you ask your dad for? Did you ask him for a pay raise?
Well, his birthday's coming up, so I got to buy him something nice.
Well, that's
so
I see. So it was self-preservation.
Exactly.
You know, it's I said, we've employed a lot of interns here at this studio over the years, and I've had a lot of friends call me and say, "Hey, Sully, can you?" Well, and I only have one rule, and I bet your dad adopts this rule very soon. As long as the kid asks me personally, and you don't ask me, and we've never said no. Have Chris? Have we ever said no to anybody? As long as the kid asks,
Right.
And 9 times out of 10, the kid won't ask.
Right.
So, if you go up there, this dude, you walk into his office one day, maybe late on it's like buying a car. Last day of the month, late on a Friday, he wants to get out of there, corner him. In the next, right?
That's pretty good advice for a lot of your listeners, isn't it?
Strategically speaking.
Last day on Friday.
Well, listen, when I don't do a lot of things well. One thing I do really well is buy cars. I have all my friends take me with them to buy cars because I am such an SOB when it comes to buying a car. I go in on the 31st of the month, and I ask for the guy who has the least amount of sales. I show up at 8:30 at night because what time do car dealerships close? 9 o'clock at night. I walk in and they say, "We're going to buy a car here tonight, but if we don't get it done in the next half hour, we're out of here." And I tell you what, every single time they will just throw up their hands and give up. And it's usually as you're walking out the parking lot, they usually come back and get you. So this is advice for you next time you get a raise.
Good advice for all
Just call me up Friday afternoon. He wants to get out of there. He's got a date. Whatever's going on in his life, go corner him. Talk to us about the U.S. economy. I was looking at usdebtclock.org the other day, and I got sick to my stomach. Obviously, with all the politics going on, everybody's talking about the economy and who's doing what. The one fact that you hear all the time is that Apple has more cash than the U.S. government. That's not so much a comment on Apple as it is on the U.S. government. Right. How's our balance sheet as a country? Are we doing okay?
We're doing great. That's a great thing you bring up, because one thing people don't look at is we look at the debt, kind of like our credit cards, what we're actually doing here. Right. But if you look at the balance sheet of the United States government, people don't realize we have assets of $269 trillion.
Now, what is that based upon? Is that based upon everything the U.S. owns, or is that on everything we own as a country, sort of like a GDP number?
Think about all the buildings that the government owns. Think about 640 million acres of land across the country that the government owns.
So these are actually balance sheet type stuff.
Balance sheet stuff. 2.5 billion acres of mineral rights and about 147 million ounces of gold. I mean,
so our balance sheet looks pretty good.
Yeah.
Are we in the positive?
We are in the positive. Again, we got assets of $269 trillion,
right?
Debt $146 trillion.
All right.
So that gives you an equity or net worth of $124 trillion. Now, if we
$124 trillion. So if we had 124 trillion outstanding shares, we're trading at $1 a share right now.
Yeah.
Think about that.
Yeah.
So that, if you think it, and honestly, that's what our market cap is. That's what our value is. That's pretty good. That makes us the #1 economy.
And see, when you think about it, and again, I know you had somebody here earlier talking about running the government as a business. Yeah. Well, if you were a business and you had a little too much debt, and I think the number was we have 1,200 buildings across the country that the federal government owns that are sitting idle, that they're spending about $1.2 billion to keep those alive. Right. Well, wouldn't a smart person say, you know what, let's unload those and pay down some of our debt, our high interest debt?
My first thing is that for every homeless person in this country, it costs you, the taxpayer, not you personally, but your city, about $16,000 a year to take care of a homeless person. You put them inside of a building like that, and suddenly
there's another
it goes
option.
down to $9,000.
Another option.
The other thing, why wouldn't we lease those out? Why wouldn't we lease those out to the private sector? I mean, there is. I mean, obviously the commercial developers wouldn't like that because it's more competition.
Right.
You're flooding the market with buildings, but
you know why
it's a
they're not
smart thing to do, though.
Yeah, you know why they're not leased out? Because the government's run the way it used to be run, as a politician. I mean, the old political way.
Right.
That's why I'm talking about shaking things maybe up a little bit, and maybe doing things different. Run the government as a business, maybe.
You know, speaking of businesses, if you think in terms of if you think in terms of running this country like a business, the first thing you would have to do is look at the balance sheet. But the other thing you'd have to look at is you look at the macroeconomics and cash flow. Okay. And what I would argue is this: the balance sheet might look good, but our cash flow is not great. If you think in terms of unpaid taxes, we've got $500 billion in unpaid taxes, uncollectible taxes, perhaps, which would tell me that maybe you have to change the tax code. Right. Now, that's a rhetoric that we could talk about for 4 or 5 hours. But just strictly as a balance sheet question, what you're saying is that we're doing pretty good as a country.
Yeah, we built this strong company, and right now you're right. We're having cash flow problems and so forth. But if we can fix the cash flow problems. And I want people to realize the government is not going to fold. There is plenty there to work with, but you need somebody to kind of work with it and not just ignore it. I mean, there's some great things they can do.
One of the things that I was talking to my daughters about, and I know that I've got kids the same age as Chase, and they're talking about investing. You know, they're talking about, and it's interesting. They're not doing it to get rich. They're doing it because they don't want to work very long. It's a different type of thing. You know, we invested younger. You know, we started to invest to get rich. Then we started to invest to retirement, and then we probably lost our way ideologically. But
and then we decided not to retire.
Not to retire. We're just going to keep working until we die anyway. So it doesn't really matter. I started looking at really if you did a profit and loss, a P&L on your life, what you'd have to consider is how much money you've spent to get to where you are. Part of those costs is college tuition, right? So I'm in my last year of college tuition. I'm going to graduate this year. What I mean by that, I've got 2 daughters in college. One of them just finished, actually. So I've got 1 more year of college tuition. How much has college tuition gone up from the time that you and I went to school versus when these guys go to school?
It's incredible. I think it was what we did the last, 35 years, Chase, we looked at it?
Yeah, I believe it was 40.
40 years. Over 40 years, college tuition is up 1,000%.
Have costs gone up 1,000%?
Think about it. Our professors paid 1,000% more. Right. Our books 1,000% more. No, I mean, it's just a crazy system of what's actually going on. And the reason for it is even more crazier. You know why it's up so much?
Why?
Because there's unlimited supply or demand. That the government says, oh, we'll give you money, we'll give you grants, we'll give you loans. So therefore you have these small businesses saying, hey, open up a university because you've got this guaranteed income coming in from the government. There's no risk for you opening a university.
So,
we know many universities that are private that have opened up, made tons of money from the government.
Well, so go ahead.
The other thing is the demand. The demand has just gone through the roof because now in today's society, everyone has to go to college.
High school education isn't enough anymore. Right?
Yeah, and I think it's a problem because everyone goes to college and they get out of college and they're like, oh, well, I went to college, and it's kind of this, oh, I'm too good for that job.
Well, that tells me I should be investing in colleges then. Shouldn't I? I mean, are there any? I mean, there's National University, I think, or University of one of the two. National University, University of Phoenix is public.
University of Phoenix is public. Yet National is not.
Is not.
Ashford University is another one here in San Diego that's public.
Yeah.
You got Grand Canyon University. Their symbol LOPE. They're public.
How are they doing?
They actually look pretty good. I mean, their sales are up about 13%. Earnings up 17% year over year.
Do you look at debt to earnings?
Debt to earnings?
Debt to income ratio?
No.
You know, what do you look at?
We look at debt to equity.
Debt to equity.
Yeah. It's kind of like if you have a house worth $1 million.
You know, when you're looking at an equity investment as a hedge fund, you look at debt to earnings, potential earnings. You look at the pro forma. You look at an income projection. You can't do that though in a public company, though, can you? You have to look at what they have in the books right now. Correct?
You probably could. I mean, you can figure out anything you kind of want.
So what is debt? So explain debt to equity for the rest of us.
Debt to equity is like you have a house worth $1 million. If you owe $500,000 on it, your debt to equity is 50%. So you're pretty comfortable that no one's going to take that away from you. On the other hand, if you have the house worth $1 million, sounds pretty good. But what if you own $1.5 million on it? Not a good position.
See, what's interesting, so when you do a private investment into a private equity, into a private deal, You look at debt to earnings or debt to income. It's the same thing, okay? And what that tells you is you look at the pro forma. You look at the income projection of a company before you invest, because obviously you don't know, they haven't made money yet.
Right.
And you look at where they start, because everybody starts in a hole.
Right.
And that's one of the metrics. You don't have to do that in a publicly traded company.
You don't have to do that. And one thing too that, and again, I know you kind of specialize in the private stuff and so forth. One thing always worries me is how do you rely on those numbers?
Well, that's true. In fact, and I'll tell you how you do it, because there's only one number you need to figure out. Right. There's only one number you have to guess at to figure out what a young company is going to do. And I think I would argue that you could probably do this for a publicly traded company too. All right, Brent Wilsey's here, Chase Wilsey's here. We're going to talk to him. Foreclosures is on the foreclosures are on the rise, or are they dropping? Brent's going to tell you here in a second, and I think you'd be surprised by the answer to that. It is Big Biz Show, bigbizshow.com. You can follow us on Twitter. Don't forget about the Biz TV Club. I'll tell you about that coming up. Exclusive content, and you can get it for free, and I'll tell you how coming up after the break. It is Big Biz Show on Biz TV, Biz Talk Radio Network, and American Forces Radio Network in 175 countries and all the ships at sea. Stand by.
Oh, wow. Wait a second, man.
Big Biz Show, bigbizshow.com. Biz TV, Armed Forces Radio Network, now called American Forces Radio, as well as Biz Talk Radio Network. Good to have you on. Russ went to Mexico a couple weeks ago. We haven't seen him since, but I think we will see him this week. From what I understand, he'll be back. Great to have you along today. Brent Wilsey, Chase Wilsey, Wilsey Asset Management in studio with me, a brain trust of knowledge. An interesting fact, and I think a surprising fact, is where we are in the foreclosure market in real estate. So here in Southern California, the latest report I heard is that many areas in Southern California are at their peak as far as value goes, okay? Is that because the economy is doing better, or is that just a function of the real estate market being cyclical right now? We just happen to be in an upswing right now.
You said houses at the peak right now?
Well, there's some areas in Southern California, Newport Beach, Rancho Santa Fe, the higher area, La Jolla, California, the higher areas are at their peak values right now. They're comparing them to pre-recessionary periods. The rest of the country, though, is still flat. What does that tell you about? What it tells you about real estate is maybe you shouldn't invest in real estate right now.
Well, I mean, real estate is, and again, we have our feelings on real estate, but I mean, I think it's great if you need a home for your kids and so forth. But I think right now, real estate, people always forget about real estate when they look at, well, I paid $1 million for it, now it's worth $1.2 million. They forget about the commissions they paid. They forget about the sales, not the sales tax, the property taxes, the maintenance, the upkeep, and everything else. And you look at your net return is very important to see what that net return is. So that's one problem, not with real estate, but looking at the true return is what I always talk about.
So talk about how we're doing as a health real estate wise. Foreclosures were a big issue for a long time.
Yeah, we looked at foreclosures, and back in 2010 we had a peak of 117,835 in September 2010, just in 1 month, and nationwide of foreclosures. Now, how's it look now? Right now, we have a total for June of 38,000. So now, what is this? And Chase and I talked about, is this a great thing for the housing market, or is it proof that the economy is more stable?
Yeah. So you've got roughly a fourth of what we had before, right? In foreclosures. Now, was part of that due to predatory lending in your mind, or was it really an economic cycle in your mind?
Both. I mean, because again, back in 2008, 2009, I mean, if you could, say hello, you'd get a loan pretty much.
Yeah, pretty much.
So everybody got one, and then people couldn't afford it. I mean, they didn't have to say what their income was or anything else, and so they got way over the head. So that caused a lot of foreclosures.
Sure, exactly.
Now we're back to reality, saying, hey, you've got to have income. You can't have a lot of debt to buy a home.
Here's my question, Chase. Will you buy a house?
My goal is to buy one house in my lifetime. I don't want to buy more than one. I will do it, I think, once I get married, have kids. But this is probably when I'm 35, 40 is when I'll look at buying a home.
Really? So it's not part of your... It's what's interesting is when you and I were younger, our goal was to buy a house.
Because we didn't know better.
So how do you feel? The same philosophy?
Same philosophy. And we've actually looked at it, and I forget the exact numbers, but when we went back, I think it was, 30 years again?
If we go back 20 years.
20 years.
The average house has appreciated 3.2% versus the S&P 500, which has appreciated 9.9%.
Okay, here's my question for you. And I know there's a million other variables. I'm just saying, all things being equal. If a 45-year-old had a house with $1 million equity in it, would you tell that person to sell that house and invest that money in rent?
So it depends on the whole situation. I mean, in reality, looking just at the numbers, yes, you'd be better off,
dropping that $1 million in the bank,
right,
and renting for $2,000 or $3,000 a month or whatever it costs in your area. Right.
And I met a guy at a party a couple weeks ago, and he's about in his mid 40s. That's what he's done. He goes, I never bought a house, don't want to buy a house. He goes, I've done very well. My portfolio is very large, because the nice thing about an equity portfolio is you don't have to call the plumber to fix a sink. You don't have to change the roof on it. I had somebody call me, a client, and what's really funny is I have these clients that call me up that have rental properties. Oh, I need to pull out $20,000 to fix this. I need to pull out $10,000 to fix this.
Oh, so you mean, so not only just living in your home, but real estate as an investment?
As an investment, yeah. And they say, and what was bad too, I mean, years ago it was pretty good because you got depreciation, you got all these tax benefits.
Right.
The government's wiped those out.
Yeah.
So you're back to comparing the growth of a stock versus the growth of a property. And again, people say, well, I bought this house, in San Diego and it did this. Well, I can say we bought, XYZ company 5 years ago up 500%. So we're talking about the average nationwide, the average of all the indexes.
Family in my neighborhood just recently, and they're in their early 50s, okay? And they've probably got $1.5 million, $2 million equity in their home. Okay? It's a pretty big house they live in. It's a much bigger house. They just sold their house, and they decided they're just going to rent from here on out, because they figured, you know what? I got all this money sitting in my house. Okay, it's appreciating. I mean, look, and I've got a very small mortgage, so either A, I'm sitting on a big lump of cash for the rest of my life, and I got a place to live, or I can make that cash go to work for me.
Exactly.
And I could live off of that. I mean, could you imagine if he's 50 years old, he's got minimum, God willing, 25 years of life left in him. Could you imagine letting $2 million sit there at a very conservative, let's say 6%?
And now,
over the course of 20 years, that money is going to be worth like $11 million or something crazy like that.
And the other thing, too, people got to realize, too, is that the land appreciates, the house is a depreciating asset. As that house gets older, more things break, more things need to be repaired. So you are sitting on a depreciating asset of the house on that land that appreciates. So it's going to cost you more as that house gets older.
So for you, if, as Chase is entering into his investment, so let's fast forward 10 years, 32 years old, met a girl, getting married, starting a family. Does he change his investment strategy at that point towards looking towards the real estate market? Or do you stay the course, or does it just depend?
I mean, I think it just depends, but I would say why change the course? I mean, because again, and what it drives me crazy, people say, oh, I'm going to pull out from my 401k to put a down payment on this house. Why are you doing that? That's so crazy.
Do you say that?
What's that?
Do you say that to your clients?
Yeah, well, no, I don't.
Why not?
I try to be nice.
Why are you doing that? That's so crazy. I would love to hear that. Very quickly before we let you out here today, two stocks that we were looking at, we were talking before, Weight Watchers and Lowe's. What's going on with those stocks?
Well, I mean, Weight Watchers had a big bump because Oprah stepped in and bought it. Well, they went up. Do you remember the numbers, Chase? 25.
Yeah, it was 22% like the first 3 weeks that they bought it, right?
It went up like 80%.
Yeah,
was it 80%?
Yeah, we saw a huge bump.
We can see the Oprah bump there. And now it's back down to, probably about.
So that was an exuberance bump, and that's so is this a fallen angel for you? Is this something you want to stay away from?
I mean, look at the numbers. I mean, their target sell price was $18.65. They got their debt to equity. They had no debt. Current ratio is kind of light. Yeah, didn't look good. All
right, stand by, because Friday they will tell you about Lowe's.
Oh, we got plenty to talk about.
All right, we'll talk about Lowe's. Thank you, Brett. Thank you, Chase. Chase Wilsey, Brent Wilsey, Wilsey Asset Management, of course. I'm going to call them the Brain Trust here on the show, for sure. All right, that does it for us. Chris Janikis is our director. Curtis Madich, our assistant director. Murphy on sound. Jared Coleman, our cabana boy. David Kamatoy, our producer. Rusty nails his website, russisfunny.com, because russisfatandball.com is taken. I'm Sully, my website, bigbizshow.com or jumptvstudios.com, or follow me on Twitter at Sully on the Air. Thanks again to our folks back at Centerpoint Broadcasting back in Dallas, Texas. It is the Big Biz Show, Biz TV, Biz Talk Radio Network, American Forces Radio Network. We'll see you tomorrow.